Good afternoon. Welcome to Halftime Report. 12 noon, halfway through the trading session and staring at a powerful pullback rally. The Nifty, as we speak, is higher by about 125 points. The Sensex 2 is showing you a gain of about 350 points. In the last 30 minutes or so, or 1 hour maybe, the Nifty gains may have plateaued, or the benchmark indices gains may have plateaued around that 1.2% mark. But it's the mid-cap index or the mid-cap space which is taking off. So the index is now higher by 3.5%, and now you've got 5 stocks in the green for 1 on the losing side. Broad-based gains, you would say, but the leadership mantle is clearly with the NBFCs. Hi, Surbhi.
Hi, good afternoon, Rima. And yes, it is indeed turning out to be an auspicious start to the festive season. At least for what it's worth, we've got green on the screen for our markets right now. And the trick is, of course, to see what happens in the second half, whether this kind of a powerful momentum that we've seen in the first half, whether that can be sustained or not. So far, it's been a better day. It lacks the sort of absolutely eccentric volatility that we were looking at over the last couple of sessions as well. Just watch out for all the financials. As Rima pointed out, NBFC is leading from the front. But in the last couple of minutes, there's a lot of buying in a couple of the private sector bank names as well. IndusInd Bank would be a case in point. So some of these stocks are moving substantially higher at this point. We'll take, of course, a lot of these cues as we go forward. Let's get started with the headlines. The Lal Street sees a relief rally as crude prices ease off and the rupee moves off record lows. The Sensex and the Nifty gain over 1% each, buoyed by news that banks are now ready to buy NBFC assets. The mid-cap index sees a sharp recovery up, gaining almost 3.5% at the moment.
NBFCs like Divan Housing, Shriram Transport and Edelweiss gain anywhere between 10 to 15% as banks say they're ready to buy loans from them. Indiabulls Housing Finance tells cnbc TV 18 they will sell loans worth 3,000 to 4,000 crores this quarter.
Auto stocks gain after the insurance regulator clarifies on personal accident cover. Says insurance companies need to offer both 1 year as well as long-term covers. Auto manufacturers say the IRDA ruling will have a positive impact on sales ahead of the festive season.
NLC India, NALCO, NHPC rise on buyback plans as Street expects higher offer price, but their big capex plans raise questions of the motivation. And the big story today is the NBFCs and the kind of gains that we've seen. The move has come after banks such as State Bank of India have indicated that they will be buying loans from the NBFCs. Is this a win-win situation? Is this a resolution to the tight tight conditions that NBFCs are facing in terms of borrowing? Lata joins us for more on that. Lata?
This deal is a win with a capital W for the banks and a lowercase w for the NBFCs. Banks are quite clearly not willing to lend loans to NBFCs, even up to the sanctioned limits. Their argument being that for every loan, they have to keep capital of 20%, which means 2 rupees for every 100 rupee loan, provided it's a AAA. If the NBFC dips in rating, then they will have to keep 7 rupees out of for a 100 rupee loan, and capital is hard to come by. Therefore, what they have posed to the NBFCs is that if you have a liquidity problem, we will buy out the entire loan and you don't have to repay the loan. The money is yours. The money is freed. The problem is, if the problem is very acute for an NBFC, then banks are even more proactive because they don't want an NPA borrower on their books, and so they're willing to buy out a portion of the loan so that that money can be taken by the NBFC and he can redeem his CPs or debentures. Now, the debt market has not yet seen CPs of NBFCs being bought. It's too early in the day. But their belief is that in course of time, things may ease up a bit. But what could happen is if banks cherry pick and NBFCs give their best loans to the banks, going down the road, even if the temporary liquidity problem is solved, there could be a liquidity problem later on because NBFCs may be perceived to have a slightly lower quality residual loan book, and it may get that much the more difficult to raise capital. But that's a problem for a later part of the day, for maybe a year down the line. At the moment, it looks like the debt problem will defreeze. The way the stock markets have cheered, if even 1% of this cheer steeps into the debt market, it's quite possible that in a quarter or so, the worries about NBFCs not returning loans could be forgotten, and even the medium-term issue may not happen. For the moment, the bankers and debt markets believe NBFCs with a very strong conglomerate backing, corporate backing, or an LIC backing, will be the ones that will come out of the problem easier, and for all you know, they will even eat up the market share of the smaller NBFCs. For smaller NBFCs who are selling their loans, liquidity will not be the issue, but growth will definitely be an issue.
Okay, all right, Lata, thanks very much for putting that in perspective. In fact, we spoke to, both sides of this debate, and both the buying party and the selling party. Let's first hear it out from the bankers. Here is what Mr. Rajneesh Kumar, chairman of SBI, as well as Raj Kiran Rai, MD and CEO of Union Bank, had to tell us on the matter, whether they will indeed be spoiled for choice with all these NBFC assets up for grabs.
With any NBFC, there is a situation where there is a asset liability mismatch. Then through this action, what will happen that they can offload some of their portfolio, and we are a willing buyer, and their dependence on the short-term paper will go down. So I think it is a very good and a perfect solution, and SBI, we have the capital, we have the liquidity, and you have been telling us that SBI is not growing as fast as it should. So why not make use of this opportunity?
Okay. So do you see a lot of sales happening, and do you see them happening at very attractive rates for the bankers, because you all have the money and therefore you can call the tune?
State Bank of India, again, we are a very responsible bank, and definitely we would be mindful of the fact that if there is an opportunity to buy the portfolio at a rate which is suitable for the bank and which is suitable for the seller.
Okay.
So we will be looking at that, but we are not loan sharks, let me tell you. State Bank doesn't work on that principle that here is the opportunity and you charge whatever you want to charge. It is not a responsible.
Has any deal been done already, Mr. Kumar?
It is a continuous process. Only thing is what we are doing is now we are stepping up.
Okay.
We are stepping up the target.
We are processing about 2,000 crores of portfolio buyout. The due diligence is going on. It's a continuous process, and we have space for maybe up to 5,000 crores of portfolio buyout in the next 1 or 2 months. It will be at a reasonable rate, which we are doing, and with the risk pricing mechanism we have. And these are our regular customers. Actually, we will not, as public sector banks, we never do that kind of vulture pricing. NBFCs, generally we are sanctioning credit lines. Now, instead of credit lines, we will go for pool buyouts to a great extent till these things stabilize, because NBFCs need this liquidity at this point of time. We prefer the housing loan portfolios and MSME portfolios because it helps me in my priority sector target achievements.
We also spoke to Gagan Banga, the Vice Chairman and MD of Indibles Housing Finance, on how much loans they are targeting to sell to the banks.
Indibles Housing for the last many years has been selling its portfolios. Over the last 18 months or so, ever since our balance sheet crossed a lakh crore size, we actually upped the whole program to almost 25 to 30% of our incremental financing. So last year, we sold roughly 11,500 crores of loans. In the first half, we've sold approximately 5,000. We should be selling 3,000-4,000 crores this quarter. We've done primary issuances of over 3,500 crores. So in that sense, the bond markets are differentiating. At some level, even the equity markets are differentiating.
Okay, so that is what some of the NBFC companies had to tell us today. Taking the story forward, SBI sources are telling us that there has been no large loan portfolio purchases from DHFL, at least in the recent past, in the recent times. Ritu is joining in with more details here. Ritu, of course, there's a lot of guessing around going in the market as to who is selling how much of their loans and whether SBI is buying. Do set the record straight for us.
Well, you know, several NBFCs are eyeing the opportunity to sell off these loan portfolios to generate some liquidity. Banks are also going to be evaluating these opportunities. Just yesterday, State Bank of India did say that they have tripled the target for purchases from NBFCs to almost 45,000 crores. But that said, we spoke to officials within State Bank of India. You know, no such large loan portfolios have been bought from NBFCs just yet. Remember, the target was only tripled yesterday. So, you know, any reports in the market about DHFL selling about 5,000 to 7,000 crores of loans to State Bank of India, that is something that State Bank of India at least has denied. They said they have made such purchases in the past, especially in the priority sector. But in the recent times, at least, no such large portfolios have been bought. However, they remain in the market and are currently evaluating several such portfolios, and those announcements should be coming soon.
Okay.